Hello, and welcome to CTRM Radio, an ad hoc podcast by Commodity Technology Advisory, hosted on ctrmcenter.com and ettcenter.net. The podcast is available on our YouTube channel, so please do subscribe over there to be sure that you don't miss an episode. It's also available in audio format on all podcast outlets like Spotify and Apple, for example. Anyway, recently ValueCreed reached out to me to tell me about a trend they're seeing in terms of European energy companies getting into US energy markets. I thought this was quite fascinating, and so I asked Rathin Gupta to tell me more. I started by asking about what was driving this particular trend.
Yeah, I think we've seen quite an abundance of clients trying to do that recently. I think a few things probably are playing a factor in this, right? Obviously, the Ukraine-Russia war, that's creating a lot of stress in the gas
Yeah.
supply in Europe, right? Which is probably one of the primary reasons or primary sources for power generation, right? Like, so to get a little bit more security of supply, people seem to be coming into the US, going off the shale production of the gas here in the US. I think that's one of the primary factors, but there are probably a little bit more that we can discuss as we go on in this discussion. But I think the whole Russia thing is definitely a big factor in this, right? Like, so Russia, because of all the sanctions on Russia, the European countries are trying to stay away from buying gas from Russia, and Russia is the biggest contributor of gas, right? So unless you have strong renewable assets in Europe, and you depend on gas, like your other option is US, right? So I think that's probably one of the biggest reasons why uh, companies are coming into the US. So all the big players that have the ability to control this supply chain, I
Yeah.
think for them it's a no-brainer, right? Like to come and play in this market, diversify in this market when there's so much liquidity in this market, right? So I think it makes total sense at the point, but that Russia thing is probably the biggest driver.
So these are primarily energy companies that you're seeing make this move, or?
Yeah, like people, especially the integrated companies, right? The ones that have enough infrastructure where they can control the entire supply chain for power generation are typically the ones that we are seeing coming into the US, right? Like they're opening their trading shops in the US. They're taking gas up to the LNG conversion units, converting it into LNG, then moving it on their own vessels up into
Yeah.
Europe, and then using that LNG as a source for power generation.
It's a very interesting trend. So what are the reasons are there for European firms sort of opening operations in North America these days then?
So I think one is obviously getting a better control of on their supply chain, like I just mentioned, right? But the other one is obviously the way the U.S. markets are structured is very different from Europe, right? Like there are so many different hubs, like the Henry Hub. There is then if you think about on the power side, there's different ISOs, and every ISO has their own way of operating. They have their own ways of trading. But what that does is that it gives the companies the flexibility to hedge across all these different hubs. Whereas in Europe, I think it's mostly very centralized, right? Like so, there's not a lot of flexibility in terms of diversifying. Whereas in the case of the US, just because of the way the markets are structured, diversification can play a big role, right? So what ends up happening is that it becomes easier for companies to come in and start trading in one of the ISOs or one of the hubs, right? You don't
Right.
have to play a role in the entire centralized hub from a hedging or trading perspective like it is in Europe. In because it is a little bit fragmented in the US, entering the markets becomes easy, and then you can expand as you go along. So the barriers to entry is pretty low. Um,
What about what
and
about
then
the growth of renewables in places like Texas and
yeah.
California? Is that helping drive some of this interest as well?
Yeah, absolutely. So I think one of the biggest things is that I think our European counterparts are obviously a little bit ahead of the US counterparts when it comes to trading renewables, trading carbon. Just the renewable transition has been a little bit faster in Europe. So what that gives is these companies in Europe, they have an edge, right? Like they have experience dealing with that, and they're bringing that into the US markets. And the US markets, even though their growth is exponential in US, but it's still in the early stages, right? So it gives the European counterparts an edge to play in those markets,
Right.
and they're bringing that experience over here, right? Like so, I
Yeah.
think if you add the diversification of supply, you add the low barriers of entry into the U.S. markets, and then you add the ability for them to play a more strategic role in the renewable space. It just makes more sense for these companies to come into the U.S. Now, again, for the smaller players, it might be hard, right? Like again, as much as the barriers to entry is low, the smaller players may not have the entire infrastructure to play in the U.S. markets. But for the mid-size and the large size companies, we are definitely seeing that push.
Interesting. And I suppose the does a weaker US dollar and the high energy costs in Europe play a factor in it as well?
Yeah, so I think not just obviously the FX rates definitely matter, and the US dollar being a little bit lower is helpful. But I think the bigger geopolitical reasons that is probably driving this is one, most of the gas in Europe is supplied by Russia, and Russia being a shock in supply because of the wars and all those kind of things. Obviously, the supply coming into Europe has been impacted because of that. And then you add the US administration, right? Like the new administration with all the
Mhm.
different policies that they're coming out with. I think obviously that has an impact on the dollar, but more so it has an impact on the ability for companies to come and invest into the US, right? Like it has become very pro US investment, which is why I think it's incentivizing some of these companies to spend their money in the US. Like I think that is probably was some of the bigger geopolitical reasons that is driving this move
But
recently.
it's interesting because we did a briefing the other day, and I had to prepare some slides, etc. And it seems like Europe is actually decreasing its dependence on Russian gas, Russian
Yeah.
energy
Yes.
very
Yes.
effectively, but it's
Yes.
swapping it for a dependency on American gas through
Yes.
LNG,
Yes.
and
Yes.
also on China for technology and assets in the renewable space,
Correct.
which is really, swapping one for another, really, isn't it?
Correct. Correct. And you probably said it in a much better way than I could have, right? Like that's exactly what I was saying, right? Like so
Yeah.
because of this shock in the Russian gas supply, people are trying to diversify out of it. And LNG growth in the US is probably driving the first, there is an abundance of shale gas in the US. And then you add on top of that the ability to convert the gas into LNG. The US seems to be investing quite a lot in those facilities. It just makes sense for these companies to come into the US, right? And if you have the ability to control that entire supply chain, it's like buy the gas and convert it into LNG, transport it, and then use that back as gas for power generation. Like if you can control that
Yeah.
entire supply chain, then there's definitely a good arbitrage there.
Well, of course, I spent almost 17 years working in North America in the energy industry and commodities industry before I came to Europe. And I know
Mm-hmm.
for a fact that things are very different when
Mm-hmm.
it comes to trading gas power and other energy commodities in North America as compared to Europe, not
Mm-hmm.
just in terms of things like carbon credits, but even in the structure of the industry itself, as you
Yeah.
pointed out. So, if I'm a European company and I'm trying to get into North America and open a trading desk, how do I do that from a CTRM ETRM perspective? Because the chances are that my solution that I'm using in Europe isn't going to really, it's going to have some holes for North America. Is that correct?
Yeah, that's a great question, right? So this is something that we are realizing more and more, right? So we have seen a couple of models work for different clients, right? So one model that we are seeing clients apply is that they have one desk that is dedicated to the US, and then the European desk is completely different, right? So I think a lot of companies have realized, like you just mentioned, that the way US operates is very different from Europe, right? Like, so to have this interdependency between the two desks can be complicated to manage, right? So because they have separated the two desks, then it just becomes like, okay, you have an entity in the US, you have a desk in the US, and that has its own way of coming up with the right ETRM solution, the right system infrastructure, business infrastructure to manage the trades effectively, right? There's obviously a handoff between the US entity and the European entity, especially if the LNG is moving from the US into Europe. But that is just treated as another intertrade between the two entities systems, right? So it becomes straightforward to manage, and you just have to go through a separate set of selection process for these clients in the US and just make it work in the US, right? Like it's just any other client that you would
Yeah.
deal with in the US. Now, the biggest thing is that these clients will sometimes want the same solution as they have in Europe, but in many cases, we have seen that they're open to using the ones that actually work for the US. To your point, if the two markets operate differently, there are different systems that work better or better than the other in European markets versus the US, right? So many clients are open to having a different system. So that makes it much easier, right? Now, the other model is where yeah, the desks are different, but they still want to use the same system, right? Now, that system that they use in Europe might be catered towards Europe. Now, if you have to use the same system in the US, you have to obviously change the way it operates to make sure that it works for the US markets. So that can be a little bit of a complex scenario to manage, especially when clients sometimes want standardization across Europe and US, and we have to explain to them that that standardization may not work in every scenario, right? Like especially when it comes to how you calculate risk and how you do hedging, like I discussed, right? Like in Europe, it's all centralized, whereas in the US markets is fragmented, right? Like depending on the different
Yeah.
ISOs and the different hubs, the the way you hedge is very different, right? So sometimes that discussion can take some time for people to realize that even though the systems are the same, but they have to operate differently so they can manage the two desks effectively. Now, the third one, which is probably the most complex one, we do have some clients who are doing this. They do have a desk in the US, but everything after the front office is all centralized in Europe. So that means that all the risk calculations are happening in one place in Europe, and then also the settlements are happening in Europe. Now, the issue with that is you can have another system that can capture your trades, can manage those trades and whatnot. But now you have to figure out a way to take those trades into their system in Europe in order for them to do their risk calculations for the US and Europe, right? So that becomes a little bit complex in the way you manage it and the way you take the data in the US, send it into systems in Europe, and then there is a standardized way of calculating the risk in Europe so that they can use one system for everything, right? So we do have a few clients that want to do it that way, but that is where the complexity in managing these ETRM systems comes into play, right? So we've seen all the three ways, but the most cleanest way is obviously if US is its own
Right.
entity desk and they have their own control over how they want to manage that desk.
It's a funny thing because I'm sitting here listening to you and I'm thinking, I must be showing my age here, but I remember when it was the other way around, when American companies were opening offices in Europe
Yeah,
and
yeah, yeah.
American ETRM systems were being adopted in places like the UK. And of course, it's not just about the energy specific functionality, because as I recall back then, one of the issues was around taxation and American systems' inability to handle European VAT, for example. So
Mhm.
I'm sure that some of the issues that these companies face are not just about the specific energy functionality, but also about some of these other issues, risk, as you mentioned, taxation, even maybe invoicing rules and stuff like that. So what does ValueCreed have to do in terms of aiding and helping some of these people make this transition? What kind of things can you help them with?
Yeah, so with our experience working in the US, we obviously understand a lot of these different rules for settlements, taxation, risk calculations, price calculations, like all these different things that apply in the overall trade life cycle management. We understand them, right? So we help the European companies understand that when they come into the US. I mean, a lot of these companies, obviously, if they're opening a desk, they already kind of know this, right? What that has an impact on their ETRM system is what we try to explain to them, right? Like, so as an example, if they're using an XYZ vendor in Europe, and if they want to use the exact same vendor in the US, that vendor may not have that capability to calculate the US taxes, or they may not have the capability of calculating the invoicing on real-time basis, right? So
Right.
those are the kind of discussions we will have with the clients, and then that opens up the door in terms of should we just customize their existing XYZ tool and enable that in that XYZ tool, or should we go for a low cost or low maintenance ETRM system outside the XYZ that they use in Europe, and just use that for like trade management, right? Like, so it just opens up the conversation, and that's what we help them navigate, right? Like, based on your needs, um, do you really need something different, or
Right.
can your existing one work? And if you want to use your existing one for all risk management, like, can that be possible? Can we integrate the US one to the European one, or does it have to be manual? So all that technology infrastructure that is required to kind of manage the US side, that is what we help these clients with, right? Like, in many cases, they will come to us and say, we already know we cannot use our existing one, so we want you to help us find the right one. And then in many cases, it'll be like, let's figure it out. Can we use our existing one or not?
Anything else that you can help them with in that transition or that movement?
The other thing is, in many cases, our clients will know how to trade, what to trade, but they will not really know how to manage the trades, right? As an example, there's some regulatory compliance reporting that has to happen. The clients will know that it's required, but they don't know how to do it, right? Like, so in terms of there's the concept of technology infrastructure that we already discussed, but there is also a concept of business infrastructure, right? The processes, the way you manage the trade life cycle in the ETRM, also outside the ETRM. Like,
Yeah.
do you need to connect to the ISOs? If you need to connect to the ISOs, how do you do that? Is it manual, not manual? Yeah, whatever regulatory reporting you need, like, which ones do we enable, which ones we don't, right? Like, so all that discussion around what the process will look like between front, middle, and back, and then how that process will be managed within the ETRM system, what type of reports you need to generate out of it. All of that is covered by our services. And
Right.
then eventually, once you go live and whatnot, managed services like making sure that the right lights are on, everything is functioning the way it's supposed to. We take care of that as well.
To sort of summarize, you're seeing a lot of interest in moving into US or North American energy markets on part of energy companies, and that's driven by some of the things we talked about. And if I was considering doing this, if I was an energy company, what would be some of the considerations that you'd tell me that I needed to think about before I, engaged in such an activity?
That's an interesting question. Yeah, I think one is definitely keep in mind that even though the commodities might be the same between Europe and the US, the way those commodities operate, and especially operate, trading is something I think everybody understands how to trade things, but the way they operate is very different, right? In the US versus in Europe, the way the ISOs talk to each other, the way the different hubs talk to each other, how the entire hubs are connected with different pipelines, the way the tariffs are generated for the pipelines, it's very different from the US. So I would highly recommend that as you enter into the market, the way the operations work in the US, you should definitely understand that. And then whatever impact that has in your infrastructure, whether it be business or technology, that's where we can help. But that is definitely a consideration to have. A lot of clients, they want a very quick solution. Just, hey, we want traders to start trading in the US, and we'll figure out the systems afterwards. What that ends up doing is it puts a lot of pressure in terms of how you calculate and mitigate risk, right? And sometimes if your numbers and the calculations are not correct, like it can have a huge swing, right? Like especially when some policies that everybody thinks that the government has stabilized, but new policies come out and that can have an adverse effect on the price movements, right? So I would highly recommend that as you enter into the US markets, keep in mind that it's important to make sure that you have the infrastructure in place so that you can calculate and mitigate your risk effectively.
Good. All right. So thank you very much.
I appreciate it.